everyone. Hoping you can hear me and you can see me. So today I'm not in my normal house. I am at the library and I'm in this amazing room called the Blue Cat Room, and the Blue Cat is a book by Ursula Dubosc-Gasky. So there we go. And one of the quotes, it says, "If that cat could speak," she said, rolling her eyes to the ceiling, "imagine the stories it could tell." Well, those of you who know me know I have cats. In fact, I have 4 of them. We didn't really mean to have 4, but I had one, and then I thought I would get another cat to keep that cat company. And actually, cats don't really want to have company. They're quite happy to be by themselves. And I just want to make sure everybody can hear me. So if you can hear me, just say, "Yes, I can hear you." Anyway, we had one cat and I got another cat, and then we now have a third cat because that's the sibling of the first cat. And then about 3 years ago, we rescued this cat who was really badly injured, and we were only going to have him for about 6 weeks. And then he's with us all the time now because we just decided we would have to keep him, and he's just adorable. So anyway, enough about cats. I'm in the Blue Cat Room at my local library. How's your week been this week? Ingrid Thompson here. I know some people starting to join us. Hello, please say hello in the chat there. I'm really grateful to have such a beautiful home and to have somewhere comfortable to live and somewhere to work and somewhere to be. And it's because of the financial decisions that I have made most of my life. And so, I know that I have worked hard. I saved money when I could. And it's about having that financial security, that financial autonomy, the financial acumen. So I'm here to help everybody else have the financial autonomy that they want, financial independence, whatever that means to you. So I'm in the library because the exams are finished, the students have finished their exams, and so I'm working on putting the finishing touches on my 4-week accelerator program that starts this week. And I am so excited to be working with some terrific new clients to get their financials sorted out. So where are you tuning in from? Thank you. Finally able to log on. Oh, thank you for persisting there, Mark. Let me know where you're logging in from. And today I'm going to answer a question that I am asked so often. What is the difference between profit and revenue, and why does it matter? Well, it matters for this very simple reason, that when you're talking about revenue, it's actually not yours. The revenue is not always all yours. Some of it might be. When we're talking about profit, chances are a good portion of that profit is yours. So in the simplest of terms, revenue is the total amount of income you generate when you sell a product or service. So whether that's a Pilates session, a greeting card, a candle, an article for a blog or a newsletter, when you do an hour of work or a week of work, or you charge a retainer, that amount of money is revenue, sometimes referred to as income or sales. This is what's referred to as the gross amount. Now, not gross as in unpleasant, but gross what it used to mean when it meant total. So the total amount is the revenue. So that's why revenue is not all of yours. Profit is the amount that remains after you've accounted for all the expenses, the costs, paying off your debts, paying yourself. And profit is also the amount that you decide it is, because anyone who's been working with me with profit first methodology knows that we can decide how much profit we're going to have. So why is it so important to know the difference? So sometimes we look at our bank account and it looks okay, and we think, I'm doing okay. There's enough money in the bank. I'm doing fine. And that's what I like to refer to as bank balance accounting. So bank balance accounting is not something for us to be doing. Details of the accelerator, please. I will definitely put some more information about that 4-week accelerator in the notes when we're finished. Thank you. The amount of money in your bank account can be misleading because it's not all yours. Remember, we said that in fact, in many instances, the amount of revenue that you charge for something is actually not yours. So the first thing that comes out of your revenue is GST, if you charge GST, or services tax, or whatever you call the tax in the country that you live in. So that immediately belongs to the government. So that is part of revenue that's absolutely not yours. Now, if you use Stripe or PayPal or Square or any of the other forms of taking payments, they take their fee before they even give you what's left of your revenue. So it might be 50 cents a transaction plus a percentage, it might be $1. A difference is that in the when you go to a bank and they charge a credit card transaction fee, that is sent to you or taken out of your account at the end of the week or at the end of the month or at the end of the day. So you actually get the whole amount goes into your account and then they charge you back for an amount. But when you use Stripe or Square, they actually take the amount out first. So that's another reduction in the revenue. And then, of course, there's all your other expenses. And last week, over the last couple of weeks, we've been talking about expenses. We've been talking about how to calculate your expenses. So if you need that expenses calculator, let me know and I shall send it to you. I know a couple of the people listening in already have it. So if you're working with it, please do let me know if you have any questions. Type them in there. I can see your questions and I can answer those. So when we think about revenue and profit, it can be tempting to ask, how much of my revenue will be profit? And you might have heard the expression that some businesses are highly profitable and some businesses are not so profitable. So what are we talking about when we talk about something being highly profitable or not so highly profitable? Highly profitable means that that business gets to keep more of the revenue as profit. So they're not spending as much. And there are some businesses where that is actually very lucrative, that you can charge a relatively high price, that the costs are relatively low compared to the price tag, therefore more profit. Now there's other businesses that are not so profitable, that there's not as much of the revenue gets retained as profit because there's so much more expenses, there's so much more outlay, there's the cost of creating whatever it is, there's labour, there's rent, there's all of the different things. So how are we tracking here? I know it can feel like a bit of a dry subject, but I know people want to be excited about their money. I know that as business owners, you want to take control. You want to have financial autonomy. You want to be financially competent. You want to have independence. You can be as smart about your finances as you are in any other aspect of what you do. You didn't fall out of the sky knowing how to be a Pilates instructor. You didn't suddenly decide you were going to be a yoga instructor and you became that. You didn't suddenly decide you were going to do writing and charge money for that. You learned your craft. Many of you have been at university for a long time learning what you do. Finance and business is the same. You can learn this, and thank you for being here, because by being here I know that you actually want to learn about this. So profit is what you will decide it to be. When you use the profit first methodology, you can take your percentage of profit off the top. Who has set up their 1% profit first account, or their 3% or 2% or 5%? Who is already putting aside their profit and then adjusting their expenses to make sure that they actually are having their profits in their account? Okay, here's the thing. Profit cannot exist without revenue. However, revenue can exist without making a profit. And that's not a great place to be. That's breaking even or even making a loss. And you know, some years ago I worked with someone who came to me for some help because they just weren't making any money. You know what? They actually were charging less than it cost them to make the product that they were making. And that is called a loss. Now, profit is yours from your business efforts. Revenue is shared with a whole range of other businesses and agencies. So that's the big thing to remember. I find this the simplest and easiest way to think about profit and revenue. Profit is yours, and the amount of profit you make determines how much tax you'll pay, of course, and that's for another day. And that's for discussing with your accountant and how you set that up. But the reality is that revenue is not yours. Revenue is shared with a multitude of other businesses and agencies. Profit is what is actually yours in business. Revenue is essential for businesses to operate. Profit is essential for businesses to grow and to be sustainable. And ultimately, we want both profit and revenue. Without them, it is not a business. Revenue is what comes in, and profit is what you get to keep. Cannot you type that into the chat there for me? Revenue is what comes in, profit is what I get to keep. When it comes to tracking them, which is the most important to focus on, but revenue or profit? Both. I absolutely think it's super important to track both. How much revenue is coming in daily, weekly, monthly, annually? Keep your records up to date. How much profit are you making every month? How much profit are you making every week? How much profit are you making every year? When it comes to setting your goals, which do you focus on? Both. How do you increase revenue? How do you get more revenue coming in, more sales income? How do you increase your profit? There are ways to do that, and we'll talk about that over the next couple of episodes of the Livenars. So I just want revenue is what comes in, profit is what you get to keep. Just absolutely, that is your mantra. Write it on somewhere and stick it on your mirror so that when you're cleaning your teeth every morning, you see that. Now, the other thing I said I was going to talk about is really briefly, I just want to talk about this X versus Y. And that's this idea of revenue versus profit, or what can we do to increase the SEO for our business? Now, I know we talked about that in that video, so if you've had a chance to watch that video, but I just wanted to ask if anybody had any questions about revenue versus profit. What is the difference? How do we do it? What do we have that's different? And then what would be the something versus something that would be a really great way for you to attract more SEO to your business? So if you're Pilates, maybe you would write something about yoga versus Pilates, or Pilates versus yoga. You know, it can feel like, oh, how many times do I have to answer that question? Seriously, I have been answering the profit versus revenue question for 20 years. Longer, 30 years. When I was working in the corporates, people wanted to understand what was the difference. So working with small business, people still want to understand the difference. I answer that question at least once or twice a week. So if there's a question that you're answering on a regular basis, that's the clue to what is the stuff to put out there, for your SEO. So I'm going to pull this to a close. If anyone's got any other questions, I know there's some people have come and gone from the Livenar. Here we've got a question here. Are separate bank accounts the best way to keep profit and revenue separate? It's always a great idea. Great question. Thank you. It's always a great idea to have a separate profit account. So your revenue account is your main operating account. That's the account that the money just comes into. It comes from the bank. It comes from your from Stripe or Square or PayPal or wherever your money comes in from. Customers deposit straight into your account. Maybe you get some cash and you take that down to the bank, and then your profit account is a separate account. And whether you're taking off a 1%, and you also have a separate, and I talked about this last week, you also have a separate account for your GST. That's a great question, cash flow like profit. I am going to answer that one next week. Let's look at cash flow versus profit versus revenue next week. Great question, thank you. I'm not going to go into that now. Come back next week for cash flow versus profit versus revenue. And cash flow is different to profit because you can look profitable on paper, but you may have run out of money. And that's one of the greatest ways that businesses become debunked. So the takeaway for today is revenue is what comes in, profit is what you get to keep. And think about what is the something versus something that you can talk about in your business to increase your SEO. Thank you very much. I shall bring this to a close. Have a great week. Have a happy rest of your Monday. And I look forward to any of your other questions. Thanks so much for being here.